Hello everybody and welcome to this week's US dollar index and currency market update. You're speaking with McDonald. One thing to say here first on the dollar index is that last week there was a record hit for a record daily volume on the dollar index. So 81,000 contracts, or just over 81,000, nearly 82,000 contracts were traded on one particular day last week, and that blitzed the previous record of around about 77,000 contracts. To put that into perspective, that was about 6 billion notional value, $6 billion US dollars notional value traded on that one day. Now let's have a look at the daily chart and have a look at which day it was, because this is interesting. And the day it was the 9th of June, which was this day here. Now on a big volume day, what I'd like to see is that big volume day at the end of a move, or is it at the start of a move? And that day there is very much the start of a move. It's not even a very big candle. It's the start of a move. So big volume day, in fact the biggest volume day, set a new record for the dollar index. Big volume move followed by a big day. That to me says professionals buying, and it's the first indication I've seen here of the US dollar potentially starting to turn around. Last week I said I was still bearish, and it continued the start of the week, continued on down, made a low down below 74. What happened though is now the last 2 days of the week, or in fact you could say the last 3 days of the week here, we started to turn that around, we started to rally. My view is always, regardless of what a fundamental view might be, wait for the charts to show me a potential change, show me when the change is occurring. What we've got here is by no means a confirmed change of direction. I'm not jumping on the bullish bandwagon quite yet. However, I am going to jump on the not so bearish bandwagon, and I'll highlight the points where I will change from bearish to bullish. At the moment I remain bearish, however slightly less so, and there's certain points here that are really important to look at on the dollar index chart to see exactly where this might change. So looking at the monthly chart, we've got a somewhat bullish monthly candle going on right now. Quite a bearish candle, or bearish to neutral candle last month, because we had the rejection, but it also closed fairly strong. But this month we've got a very bullish candle. Now we're starting to reject down here around about 7,400. We still, of course, have got 7,600 in the way. This is going to form major resistance for any move to the upside. It needs to be remembered, 7,600 is key. There is also a bit of a zone there. It's not precisely 76, but there's also these old lows back up through here, which are more like 76.30, 76.40. So we've got a zone there for price to be testing on the upside, which is going to prove quite hard for price to be getting through. If we come and look at this on a weekly chart, and that exact zone stretches out a little bit, because it starts at 76 down here, but really we've got potential resistance all the way up to this high that was made just 3 weeks ago back here. This high is up around closer to 7,700, but this is really the zone. We've got previous highs through there as well, previous touches, so previous lows, previous touches all through here, and then that also formed the exact high there 3 weeks ago. And that will also be the point where, if the market turns around from here, we'll have confirmed here a higher low. If we break up through that high, we'll have also confirmed a higher high. That is the exact point where the weekly chart will move from downtrend to uptrend if price continues on up from here. So that's obviously one of the key levels. There's 3 levels on this chart. The first one is where I'll switch from being bearish to ever so slightly bullish, and that is on a break up through last week's high. We're very close to there anyway. We closed close to last week's high. The high there was 75.34. and the close was 75.18. That, by the way, is where I'll exit my short positions. So I do have short positions still open on the dollar index. If this week opens up and continues down, then I will stay short. However, we're very, very close to those highs. I will exit my short positions now on a breakup through last week's high. That's the first point where I turn slightly bullish. Then the next point will be 7,600, because then we've got to come up and we've got to test 76, and all the way from 76 pretty much up to 77 there's going to be a lot of resistance for price to get through. I expect price to find some resistance there, and I also won't be shy of taking short trades there if price starts to reject that level. However, if price does break out through there and does continue through there, especially if it does it with ease, it's going to show me there's very few sellers. We've already tested that level enough times. There's very few sellers. If price breaks up through there with ease, there's no resistance, and actually I will change from bearish to bullish. I'll say price is likely to continue up, especially once we've broken this high. Let's get the exact high there, 76.95. So pretty much then we've got the big number of 77. So let's just call it 7,700 here. If price breaks up through 7,700 and holds, this is starting to look like at least a temporary retracement, a temporary rally in the US dollar. Now, I'm not, like I say, completely sold on it until I see these levels get broken, because there's just so much in the way, so much that could stop price still from going higher. However, it's starting to show some signs. And I particularly like it there on the daily chart. Just looking at this on the weekly chart, doesn't really change anything. You know, I've got 7,600 clearly marked in. You can see the touches. It is going to provide a bit of resistance. I'd be very surprised to see price test 7,600 and not have at least a little bit of a fall away. For that reason, I'll be doing things like setting alerts at that level, as I've had alerts set there for months. But setting alerts as price gets to around about kind of 75.85, 75.90, just to let me know that price is approaching that level and to start for looking for any reason to sell. I won't sell, by the way, just because it touches 76. I look for reasons on the candles to sell, which also gives me the opportunity there that if price smashes straight through 76, that I never got short and I never had to force a trade. I wait for the trade. I wait for the candles to confirm. If price breaks straight up through, then I won't take a short trade. I'll be watching with thereafter with interest what happens if price gets up to 7,700. Now, last week I said I might short any retracements as we move down and pull back up. The reason I'm not doing that now is I like to draw a Fibonacci line from the high down to the low. What I'd be looking for is price to be pulling back into a cluster of support and resistance around the 50 to 62% pullback zone. So if price had have been clustering like earlier last week, right? If price had have been pulling back in, and it was, say, the 7,600 level was clustering right on the 61.8, I would have considered that a decent short. But because we've moved down further now, and because it'll be a pullback beyond the 61.8%, I don't like the look of it as much. It's not clustering perfectly. It's not as strong as it was. It's quite a deep pullback if it pulls back that far, and it's just not looking like as good a short as it was last week. The candles are certainly starting to look a little bit more bullish now. I'm going to be keeping a very close eye on this and seeing how we go, but that is my view for this week. I am still short. I will remain short, but only for a few more ticks. If price continues down this week, I am going to stay in short. However, if we just break up through the week's candle, I am going to be exiting all shorts. I will not be going long yet. I'll be watching 7,600, seeing if I can get a short trade, even just an intraday trade around that level, and then at 7,700 a break up through there, and I'll be considering it bullish. However, I still won't buy just because we break through there. I'll be watching for reasons to buy, and probably at that stage I'll be coming down to lower time frames like we have here on a 4-hour chart. If I just remove some of these old lines now, I'll be coming down here and I will be looking for any reason to be buying. So you can see here when we put this in perspective and come and look at a 4-hour chart, we've got a long way to go up to this level, up at 7,700, before I really start to consider anything really, really bullish. For now, yes, you might look at this and think there's a good run potentially up there, and there is. The problem for me is if it was just 7,700, then I may well look to take a trade on the way up. The problem is that we're so close to 76, and at 76 we're going to hit all of that resistance, and then from there up to about 76.40 we've still got a whole lot more resistance, and then we've got the 7,700 level, the old high, the big number. So there's a whole lot of resistance there, and I'm quite happy to patiently wait to see what happens here, and if we get through there, to have a whole lot of confidence, knowing that the buyers are very much now in control, and I can look for buy positions, for long positions, with much more confidence than I'd have to take those trades right now, where I still think there's a much higher element of risk involved. So there we go, everybody. More intraday trading for me on at the time being. My preferred trade at the moment going to be looking for trades still around 7,600 and really watching with interest here to see, is this a change of direction in the US dollar? If it is, we'll assess as and when that happens as to how long that's likely to continue for. For now, we're still in a downtrend, and let's see if that has changed by the time we speak next week. Happy trading, everybody. Have a fantastic week. Speak to you next week.